Hello, Bleeding Edge subscribers. Hopefully, you guys are doing well. I tell you what, on Wednesday, we got NVIDIA earnings, and it highlighted everything that we knew about AI stocks and AI investing. So, first of all, demand from the largest companies in the world not only remains strong, but it's accelerating. And so, some of that has to do with a couple of different things. First of all, it has a lot to do with what interest rates were over the past 20 years. They were basically zero for a lot of these large corporates. So you had Microsoft and Google and Apple borrow hundreds of billions of dollars over the past couple of years, and they used that to expand their business. Part of it was COVID. You had record demand flood into tech stocks, and it increased revenue and profits at these companies. Part of it also is regulation. Part of it is that Washington doesn't allow the Microsofts and the Google and the Amazons and the Apple to make acquisitions very easily. So these companies have tens of billions of dollars, in some cases, over $100 billion of cash just sitting in the bank. So what does that mean? Companies like Microsoft and Google and Amazon, they're going to use that cash. And right now, the best use of that cash is to buy NVIDIA chips to build out AI software and services. And they're going to upgrade with the latest and greatest NVIDIA chips probably for the next couple of years. Microsoft is building out a Copilot suite where they're layering on AI on software that they've been selling since the 1970s and 1980s. Google is going to revolutionize and change its search engine that's really been the same for the past 25 years. And Amazon, one of the world's largest cloud providers, they have to buy NVIDIA chips to put them into their cloud so other small businesses out there can use them. Then below that, there's a second tier of software and cloud provider that also benefited during the pandemic and also benefited from record low interest rates and borrowing rates over the past 20 years. And they're going to provide another layer of demand for NVIDIA chips going forward. And look, to meet all this demand, chip manufacturers, chip equipment makers, they're going to have their hands full meeting all this demand. And this is going to continue easily into next year and likely for the next couple of years. But don't be fooled. There's going to be plenty of losers in this AI race as well. One we identified early on was actually Fiverr. I wrote about this company over a year ago in January of 2023, warning readers that ChatGPT was a threat to Fiverr's business. At the time, ChatGPT was barely a month old. When I was brought on here to Brownstone Research, I alerted our subscribers and our paid subscribers as well to the fact that Fiverr is one of these fake AI companies. Most of the investing world has really never even heard of Fiverr or even used it, and really little understanding of what it does. And if you simply read the company and the executive conference calls, the CEO is going to be talking about AI, and they're going to be talking about how it's a net benefit and it's good for the company. Going to also look at the company's clever advertisements, which I think are actually pretty cool. But you might think that Fiverr is primed to do well in the age of AI. But I've used Fiverr, okay, not only as a buyer, but I've made a few $1,000 selling essentially backlinks to websites that I owned on the service. So I've used it both as a buyer and a seller. Immediately, I understood that ChatGPT was going to make low-end blog writing, logo creation, and other gig work more or less obsolete on the site. When Fiverr reported earnings this week, shares plummeted nearly 20% on weaker than expected demand for the company's services. Over the past year, shares of Fiverr are down about 50%. Imagine holding shares of Fiverr and watching NVIDIA shares skyrocket, Microsoft, Google, Amazon, Taiwan Semiconductor, Adobe, Uber. I mean, the list goes on of companies that are benefiting from AI and watching their share price appreciate. Imagine owning Fiverr stock and watching them go down 50%. That's because it was a fake AI stock. In this new world of AI, where you have this massive investment, there's going to be two types of companies. There's going to be software companies like Microsoft that are going to layer on AI and then layer on additional costs to all of their existing customers. But then there's going to be customers or companies like Fiverr that are going to be able to layer on AI, but it's not going to do anything to the company's revenue or margins or profits. Companies like Google are going to be able to use AI to make its already popular search engine even better. But AI is not going to allow Fiverr to make their business any better than before. I tell you what, if you have a keen sense of understanding technology, these types of plays are going to be easy to avoid and easy to identify over the coming years. If you're into software, if you're into the internet, if you're into technology, fortunes are going to be made over the next couple of years as AI and AI investing remains really hot. But it's not going to come without its risk. And companies like Fiverr, which are essentially fake AI companies, remind us that not every company in the tech sector is going to benefit. And I will do my best over the coming weeks, months, and years ahead to help you avoid and maybe identify some of the best companies in the sector. Hopefully, you guys have a wonderful weekend. I'll see you again next week. Good luck with your investments.